Good morning or good afternoon, everyone. We will start our webinar in 2-3 minutes. Let's just give some time to other participants to join. Thank you. Good morning or good afternoon, everyone, and thank you very much for joining this webinar today, where we will discuss the main takeaways for the Africa financial sector post COP28. My name is Marina Finken. I'm the Making Finance Work for Africa Partnership Coordinator, and I want to express my sincere gratitude to see so many of you today. So let me quickly remind you some housekeeping rules and present you the agenda of the session, and then I will give the floor to Mr. Adeyemi for some opening remarks. So many of you may be used to this role, so we will be together for 1 hour and a half approximately. You are all mute, and we will ask you to remain mute for the entire webinar to ensure that the comfort for every participant. As always, you will have the opportunities to ask some questions because we want this to be an interactive session. So you can use the Q&A button at the bottom of your Zoom screen. This webinar is available in English and in French. You can choose the language you are more comfortable with using the interpretation button, also at the bottom of the Zoom screen. You will receive the presentation and the recording of the webinar within 72 days. If you have any technical issues, please reach out to the organizers, and we will try to help us the best we can. And last but not least, please do not forget to take some time to complete the questionnaire, which will automatically appear on the browser at the end of the session. Next slide, please. So regarding the agenda, as I mentioned, I will give the floor shortly to Mr. Adeyemi, the Making Finance Work for Africa Board Chairman, for some opening remarks. Then we will get into the webinar itself. We will have a short presentation from Mr. Olumide Lala, just to set up the context, to give some background information of COP28. And then we will have the panel discussions. Mr. Olumide Lala will be the moderator, and he will present the panelists, and just taking the opportunity to thank them again for their availability. And after the panel discussion, which will last 45 minutes, we will have a Q&A session where the panelists will be happy to answer any question you have. And don't forget, you can post your question anytime in the Q&A button, and then we will have some closing remarks. So without further ado, I will give the floor now to Mr. Adeyemi for some opening remarks. The floor is yours, Adeyemi.
Thank you, Marina. Ladies and gentlemen, esteemed panelists and distinguished participants, on behalf of Making Finance Work for Africa Partnership, I'd like to thank you for joining this webinar, a post-COP28 dialogue, takeaways for the African financial sector. I take this opportunity to thank Making Finance Work for Africa Secretariat, the AFAC partners, and the Climate Finance and Investment Accelerator for organizing this important event. Since the mid-1990s, the UN Annual Climate Summit, commonly called COP, has undoubtedly set the stage for critical conversations around climate change, sustainable development, and the global commitment to a greener and more sustainable future. During COP23, we were sternly reminded by the UN Secretary General, Antonio Guterres, that climate change is the defining threat of our time. A statement that rings especially true for African countries which find themselves in the frontier of this battle. Many of us have felt the heat, especially now, quite literally, witnessing the escalation of climate-induced natural disasters. If there was ever a time to bring our inner superheroes, it is now. Because let's face it, dealing with climate change is less than about leaping tall buildings in a single bound, and more about power of policy, innovation, and finance. In 2015, during COP21, the adoption of the Paris Agreement put the financial sector at the front line of the fight against climate change. Under this agreement, and according to AFDB Africa Economic Outlook 2023, Africa requires 250 billion annually. I repeat, 250 billion annually by 2030 to implement its climate action ambitions. This represents a significant investment opportunity for the African financial sector, which has a leading role in crowding in climate finance. All this resonates with the Making Finance Work for Africa partnership. And so its mission to make Africa financial sector work in response to continent challenges, including climate change. This is why last year, the Secretariat initiated this special webinar series with the objective of fostering a shared understanding on the impact of climate change on the African financial sector and to raise awareness around the risks and opportunities that exist. Make Finance Work for Africa is proud to partner with Africa Financial Alliance on Climate Change, or AFAC, an African-led platform established by the African Development Bank in 2018 to engage African financial industry to de-risk and direct capital towards low-carbon, climate-resilient development. We must note that the African financial sector is increasingly aware of the importance of climate change. Last year, more than 700 professionals within the financial sector, probably including many of you, joined our 4-part webinar series, shows a continued commitment from banks to deal with the impact of climate change. The survey, for example, finds that 59% of banks now have climate change strategy, and an additional 22% plan to introduce one in the near future, meaning maybe 4 out of 5 banks on the continent will soon have a formal strategy in place. While we are pleased to see this progress, as we gather today, it's crucial to recognize that further advancements are imperative to fully align with the financial strategies necessary for sustainable development in our region. The African financial sector needs to step up and lead in shaping sustainable future for our continent, especially in the aftermath of the COP28 discussion. With this webinar, we aim to unpack the outcome of COP28, exploring how they resonate with the African financial landscape. Our distinguished panelists, leaders within the African financial sector, will share their insights on the takeaways from COP28 and shed light on how this development can be harnessed to drive positive change in Africa. Whether it is advancements in green finance, innovative funding mechanisms, or collaborative initiatives, we aim to uncover actionable strategies that can empower the African financial sector to navigate the challenges and capitalize on the opportunities that lie ahead. As we gather to dissect the outcome of COP28, let's remember the words of someone very wise, who once said, "Climate change is the only global tour that doesn't require a passport, but affects every passenger on the earth." Let's ensure Africa is not just a passenger, but a navigator in this journey. In this journey, let's keep in mind the urgency of addressing climate change, the collective responsibility we all bear, and the transformative and critical role that the financial sector, all of us gathered here, can play in building a sustainable future for Africa. I thank you for joining us on this journey of exploration, enlightenment with an impact focus. Without much further ado, let us begin our discussion on post-COP28 landscape and its implications for the African financial sector, and in fact, all of us in Africa. Thank you.
Thank you very much, Adi, for setting it the context. So, as you said, let's start right away. So, I will give the floor now to Mr. Olumide Lala for a quick presentation, and then to start the panel discussion. Olumide, over to you.
I'm not sure you can hear me or hear.
We can hear you. Go ahead.
Can you see me?
We can see you.
All right. I'm actually struggling to see myself. That's why. Okay. Now I can. Okay. Right. Good morning, ladies and gentlemen. Forever it is you might be joining. Today we are actually talking about in context Africa, but more importantly as it relates to post-COP. Much has been said about climate change, and thank you very much to the chairman who has just opened up. Much has been said about climate change and how it affects Africa, and exactly how it actually, the impact it has for Africa. Now, the UN annual climate summit, COP28, which completed recently in November, come December last year, recently concluded that with both positive and challenging outcomes for African continent, noteworthy achievements encompass decisions pertaining to critical areas, such as loss and damage, climate finance, adaptation, and food and energy security. These are issues that are all integral to African nations in pursuit of its climate change and development objectives, as we know. Despite these strides, it is crucial to recognize that further achievements are imperative to fully align with the strategies, financial strategies necessary for sustainable development in the region. Now, you will see that there are a number of challenges that we face in terms of what the world is currently looking at. Climate-related damage is estimated to cost the world about 16 million per hour. That is a lot of damage being done on a regular basis. However, in all of this, Africa is projected to necessitate funding within the range of $290 to $440 billion from 2024, which is this year, to 2030, in less than 6 years. This kind of underscores a substantial disparity between the committed funds and the actual financial requirements on the ground. You know, so when you think about, despite this stress, as I said, the dialogue today aims to dissect these key takeaways from COP and shed some light on the nuanced financial implications for Africa in the aftermath of COP28. Now, at COP28, an unprecedented sum exceeding 85 billion, next slide please, was mobilized, underscoring the global dedication to restraining the increase in global temperatures to 1.5 degrees. Some might argue that, attaining 1.5 degrees is not realistic. But you don't want to say that to those who are already feeling the pain. The temperature on the continent is increasing daily. We can feel it. It's affecting our lifestyles, it's affecting our livelihoods, it's affecting our food security, but also creates opportunities for us to enhance and harness some of our energy requirements and create energy security for our people. The question then is, this robust financial commitment also poses pivotal inquiry for the financial sector in terms of what are the implications and what does it hold for Africa. In terms of adaptation, lies the core of Africa's climate action strategy. A lot of conversation you will hear out there speaks to mitigation often than not, rather than adaptation, which is a clear opportunity for Africa. So the question is, despite the notable progress marked by the more inclusive frameworks of the global goal on adaptation established during COP28, African parties emphasized the limited ambitions and the absence of decisive actions regarding the means of implementation. It is imperative to recognize that without fair and equitable access to finance, which is often been a struggle for African companies and African projects, it is imperative the constraints ability to act effectively on climate adaptation remains constrained. So ensuring robust financial mechanisms and strategies is paramount to unlocking financial potential for resilient and adaptive climate responses. And I think this is where a lot of our financial institutions come in. We speak to AFAC, for instance, which was a program that was launched by the FDB and GFANG back in September 2023 in Nairobi during the African Climate Week, which speaks to how do we galvanize a lot of the financial institutions to come together to actually solve Africa's problems. Now, in addressing loss and damage, for instance, Africa is also projected to need funding within, as I said earlier, 290 to about 440 billion from now within the next 6 years. How do we mobilize that? Some of the issues that we have on the continent is that some of the monies that is actually currently being applied to climate solutions are not being recorded. The data is not adequately available to us. So literally, the financial sector needs to strategize and mobilize resources, effectively close this funding gap shortfall, and ensuring that Africa has the financial means to cope with and recover from loss and damage incurred during this climate-related impacts. Next slide, please. Can I have my next slide, please? Right. Sorry, I can't see the screen, so I don't know where we are. In the realms of climate finance, the call for collective endeavors to mobilize resources for developing countries is actuated in the Declaration on the Climate Finance. Developed countries are urged to contribute additional financing and technical assistance to meet the specific needs of developing nations. Of notable significance is an acknowledgement that Africa's domestic capital markets poses untapped potential to augment funding for climate change projects. Recognizing and leveraging these opportunities within Africa's capital markets becomes pivotal for financial professionals aiming to align investments with climate action and sustainable development. Our capital markets, and we have at least in all the 56 states, 2/3 have a capital market. Some of them more developed than others. But when you think about the level of sustainable and green bonds that have been issued on this market so far relative to other regions, you begin to ask the questions: what are the fundamental challenges that we have, and what are the market structure issues that need to be resolved for us to be able to pool these funds that we need to finance some of these assets. Now, within the context of energy transition, for example, the reduction in subsidies in Nigeria recently during economic challenges has yielded adverse effects. Notably, estimated 600 million individuals across Africa still lack access to energy. This decision surrounding energy access and transition assumes paramount importance on the continent. The discourse today on climate change and development is now inseparable, and the two are no longer mutually exclusive. As Africa countries revive their national determined contributions in 2025, alleviating ambitions in targets for food and energy becomes imperative, all the while steadfastly maintaining a focus on overall development. The challenge lies in synergizing climate actions with development goals, recognizing the interconnectivity of these realms. The key lies in crafting ambitious targets that not only addresses climate concerns, but also propels sustainable development, ensuring a homogeneous and mutually reinforcing trajectory for the continent. Now, today, exploring these topics with me is an esteemed panel of financial professionals. And I'm pleased to say that I'll be joined to discuss this with a panel of esteemed women. It will be, I must add, I think I'm gender positive today on the female side. First will be the head of group sustainability and ESG at EcoBank, Mrs. Rachel Antwi. You're welcome. Mrs. Olorunroti Doherty, Director Export Development at AFAC Bank. I'd like to welcome you. And finally, the Principal Program Coordinator, Climate Change in Green Growth Department at the AFDB. That will be Mrs. Davina Uwela Melenge. I welcome you all to this panel discussion. Perhaps I can start with a question posed to Davina, if I may call you that. We had the African Climate Week in September, where AFAC was launched. And it was launched to bring together a number of activities and a number of programs. And I guess before I speak to my other colleagues who are more in the commercial and environmental side of things, the first question I have for you is, how can AFAC being the African Financial Alliance on Climate Change, by the way, how can AFAC ensure that the voices of African nations, particularly those most affected by climate change, are heard and represented in a global climate finance discussion or decision-making process?
Well, thanks, Olumide, and let me also join the speakers before me, yourself and the chair, that we're very happy and I guess a privilege to have this conversation with the audience. I see we are over 290 people on this call. That shows the interest and in fact shows maybe responds in some way to your question. Why AFAC? Why is it important to have the African voice on this global question? So as you mentioned, the Africa Financial Alliance was launched in last year at the Africa Summit. That wasn't the first launch, actually. It was launched the first time at the bank's Busan annual meetings 5 years or so back. Back then and still now, the reason to have a common Africa voice is really looking at the potential and the problem that remains, the challenge that remains, that we are still, even when before we go to Busan for the annual meetings to launch AFAC, 5 years later, we're still at 3% of climate finance. Clearly something isn't working despite having touted the opportunities the continent has. So indeed, as we know that it takes time to get this this work done, but clearly the financial sector has a job to do, especially the African financial sector, on de-risking domestic capital or putting a spotlight on what opportunities are in terms of the financial sector. So oftentimes what you hear is, oh, Africa is high risk. Africa, indeed, the 3% comes from that because the risk profiling of this continent is way beyond what is real. I'm happy that we have real actors on this panel that will give us a bit of, that is their day-to-day bread and butter. So the fact that these banks in financial sectors really still open their shops is that there's still resources on the continent that need to be leveraged. And that's why we have among the AFAC members, the Glasgow Financial Alliance on Net Zero, the Africa chapter. It's not so much about having Glasgow GFATs. It's also important that we have a dedicated Africa network that really looks at the opportunity uniquely for the continent. To date, as part of AFAC, we've also added a very instrumental partner, the International Sustainability Standards Body, because ultimately is how do you define and measure your climate action for you to go on the market looking for concessional financing. So it's very important that we have Africa-specific standards, and that's what the platform is doing. Create a platform that legitimizes, validates what Africa financial risks mean, what opportunities are there, quantifiable and measured and posted, and ultimately be a platform for all in the financial sector to see the opportunity. I'll stop there. Thanks a lot. You're still muted.
Thank you very much, Davina. So, we've heard from yourself some of the challenges that you believe we face in terms of raising finance, but more importantly, the network itself, which is what are the African financial sector themselves doing? It's one thing to have external forces, but even internally, what is it? What are we doing? And how are we creating the opportunities to raising this funding in terms of de-risking, in terms of building the right pipelines, and the like, so that when we position ourselves, we are having the right discussion. So I guess that kind of brings me to, why are we doing all of this? There's clearly an urgency, as I said earlier on. Temperature issues create problems for our various sectors. More importantly, the food sector, agriculture, is obviously suffering from the effects of drought and unpredictable weather conditions. But at the same time, the banks obviously are positioned to provide financial assistance to ensure that we solve some of this problem. And that kind of brings me to Rachel. With increasing urgency to transition to a low carbon economy, what does EcoBank see for innovative financial mechanisms, such as green bonds and climate funds, in driving sustainable development in Africa?
Hello, thank you. Thank you very much, Olamide. I must say it's my pleasure to be here with you today, and also very much so with our former GCEO, Mr. Ade Ayeyemi. And this question, I think even Ade would have loved to answer that. Ade has left a big legacy for EcoBank in terms of sustainability and in terms of actually helping EcoBank to play a very strong role in the climate transition. During Ade's tenure here, which I think sustainability is also one of the strong legacies he left, we embarked on a number of significant transactions. And one of the key transactions that we did was in developing financial instruments, and one of the key transactions we did was a 350 million sustainability linked loan. This linked loan that we created was an innovative financial instrument that allowed us to finance both green and social loans across the 33 countries. It was a very successful loan and one that got a lot of investor interest. On the back of that, we developed a stronger sustainable finance framework, expanded the framework. This framework is what we use to guide our approach in financing various financial transactions that are sustainability linked. So for example, whether it is the green, the social, or the sustainability linked loan transactions. Over and above that as well, another key instrument that we've developed based on our framework, or one memorable transaction that we did, is the sustainability linked loan. This linked loan we sort of financed at the end of December last year. It's a loan that is linked to climate KPIs, and it was put together by EcoBank and a consortium of DFIs. It was for about 350 million. And specifically what this loan is meant to do as well is to help us to finance more climate transactions. So for example, one, we would first develop a climate strategy. This strategy would help us in developing various products and services for our customers. As part of the conditions of the KPIs that we do as well, we're going to be developing a sustainable finance desk. This sustainable finance desk helps to bring the much needed market expertise and also develop more of the products that our customers that will need. So another one also that we have in this as well, we have other innovative and more flexible instruments. So for example, we have some green loans as well, the general green loans. We have loans for solar energy, we have loans for women, we have social loans as well. And then we also have general loans for even green mortgages. We have loans for EV cars. And EV cars are something that we're also even trying to provide as a financial sort of incentive for our employees who want to sort of buy new cars, and even for our customers. So it's a financial product that we offer across our subsidiaries where our customers can sort of use. So from an EcoBank perspective, sustainability to us is part of our DNA, is in our corporate strategy. We very much take our responsibility very seriously. We have a host of financial instruments that we have developed that we are deploying into the market, which are guided by the sustainable finance framework that we use. So that's it in a nutshell. Thank you.
Thank you, Rachel. I do recall that you and I haven't probably spoken to each other in the last 5 or 6 years. I think the last time we were together yet again was on another webinar, which I think you had invited me to speak on. So I guess the table has changed on this occasion. You mentioned a number of the things that you guys at EcoBank have actually put in place. And before I go to Martin, maybe I'll just stay with you for a second in terms of the things that you put in and some of the strategies you built in. But I guess the question for me will then be the impact in terms of more or less the result. Yes, we speak about funds on the outside, but even the funds that we already have, I guess the question I have is, we have this money, what are we doing with it? Clearly, there's some challenges. What are actually the challenges that you see currently or foresee in scaling up the efforts of deploying climate finance? And how do you see us overcoming these challenges? And just to give you some clarification, so when we launched AFAC back in September, some of the issues that we spoke about was not just capacity building and capability, not even just within the financial institutions, but also their clients, but also availability of data, comparable data, and also risk framework. Now, I recall Davina saying something about de-risking opportunities. So I guess my question to you will be, what are the challenges that you foresee or are dealing with currently in actually scaling up climate finance and deploying it to your clients vis-a-vis scope 1, 2, and 3?
Yeah, thank you very much, Lamide. This is a very good question. And I think one of the key and the fundamental things for me is lack of knowledge in the market, lack of knowledge in terms of, general climate change, general sustainability, what is our role, financial instruments that we want to deploy. So we've had a lot of challenges with our customers. Sometimes it requires a lot of capacity building and knowledge sharing, training the customers in terms of, instead of perhaps going for a vanilla loan, we could give you a loan that is linked with an environmental impact that also helps your business. So we've had to embark on serious training, both internally within an organization, retraining our relationship managers to understand that we have more of a strong sustainability link focus with our customers and impacts. And then also we've done on the other side as well of training our customers that we deal with. So this kind of training and collaboration sort of helps to educate the market, educate the customers. And it hasn't been easy, but it's a journey that we keep doing. We often do certain webinars as well, and even for the Elevate program, which is a program that we use to finance women who own businesses or businesses that are majority owned by women. So sort of our gender-led investing kind of program. We give them technical assistance, we give them training with Stanford, etc. So one of the key things, the challenge is lack of education, lack of understanding, lack of capacity building, and we sort of work around that through by providing that. Another key thing that is also important is just general lack of more innovative instruments and also maybe lack of more bankable projects. I know we talk about bankable projects quite a lot. So the money is there to finance things, but do we have the right projects to be able to finance? Are these projects really bankable for us? And that is core because we're in the business of banking. As much as we believe that, we believe in sustainability, the project must also be profitable because we've got bills to pay, so to speak. So, in dealing with governments, in dealing with other agencies, you normally find people come in and say, oh, we have this product, or we have this nature finance. Yes, all is fair and well, but we need to also make sure that the projects that we do take the right economic and credit matrix for us to be able to finance. Otherwise, what are we doing? We're also even involved in greenwashing, etc. So a key thing that we also do is we partner with governments and we partner with DFIs and we try very hard to work with the regulators and helping them to develop real projects and helping them to develop policy. So when the government is coming up with a policy for a particular sector, for example, the Ghana government during COP launched the EV policy, energy transition framework, and also launched the EV policy, introducing EV buses. There we communicated what the requirements are, how we think we can work together, how the infrastructure should be built to support such an initiative that makes it easier for us to also finance. So that is key for us as well. And generally, another big challenge as well is the political will, the political and economic will generally, whether our stakeholders are willing to invest in this, whether the DFIs really do give us good climate financing that are not too expensive for us to also deploy within the market. And for me, I think that is also very fundamental in sort of crystallizing some of these discussions around climate finance, that either money is there, but we cannot deploy because it's too expensive. There are also not enough projects to meet it, then that becomes a problem. So what we also do in that aspect is, as well as that, by strengthening our sustainability credentials, by strengthening our framework and what we do, we are able to also negotiate better with the DFIs, negotiate better on the international market with our investors and come up with more reasonable rates that we can also on-sell or deploy to our customers who then also use it for their businesses. And then we use that and measure the impact. So those are some of the challenges that we face, and those are some of the solutions or things that we do to overcome those challenges. And as you say, it's a journey. And as EcoBank, with the might that we have in 33 countries, we have a very big impact on the continent. And I say that with every little thing that we do, it's like when you set a climate target, one climate target, we set it across 33 countries. So knowing this responsibility that we have, we use that very well in trying to, work around some of these challenges and also bring solutions by bringing the right partners to the table to help solve some of our problems. Thank you.
Thank you very much. You've made a couple of comments there. You'd mentioned climate target. I will come back to you on that. But you also mentioned the responsibilities or the partnership, if one to use that phrase, with the DFIs and multilateral. So with that, I'll probably go to Rati at this point to ask a couple of questions. Good morning to you, Roti. I don't know if it's afternoon where you are. I think you're in Cairo, so it must be afternoon. So good afternoon to you.
Good afternoon, Olumide.
And good to see you again. Good to see you again.
Good to see
Thank you
you
very
too.
much for joining us. So I guess my question to you, the first question will be, multilaterals and DFIs, and by the way, correlations on your foray into the Caribbean. But we will talk about Africa today. Yeah, at the Caribbean we'll talk about tomorrow. What are the roles? What roles can multilateral banks play in promoting sustainable energy access and food security in Africa, considering commitments made at COP28? And more importantly, with the amount of monies that was promised, what is Afreximbank doing to actually solve or contribute to some of this solution?
Thank you, Olumide. And I just want to say it's a pleasure to be on this panel today with distinguished colleagues, Davina and Rachel. Good afternoon or morning to you, as the case may be. Thank you for the invite to us to participate in this panel that we believe is very, very key and important, because it's, letting us, go back to what we discussed at COP, commitments we made at COP, promises made, and even responsibilities for us as African DFIs and financial institutions. Olumide, if you remember at COP, the presidency announced that approximately $700 million has been pledged to support loss and damage in developing countries, particularly countries that are vulnerable to the adverse effect of climate change. And most of these countries happen to be on the continent. But if you look at the 700 million that was pledged at COP and compare that to the needs on ground, according to the United Nations Environmental Programme Adaptation Gap report for 2023, it suggests that the needs for Africa to scale up on adaptation finance is about between 194 billion to 366 billion. That's about 10 to 18 times what you currently have in terms of international public finance that flows into the climate adaptation space. So 366 billion, you can see where we want to be and where we currently are. And, for us as Africans, the adverse effect of climate change affects us in two key significant ways. One, it affects us in terms of energy security. Another, it affects us in terms of food security. If you look at the whole of South Africa as we are, they went through El Nino from October 2023 and is estimated to run to March 2024. This is significant drought in majority of South Africa. If you look at the Sahel region of West Africa, bordering the Sahara Desert, most of the areas are facing intense desertification, leading to food insecurity, loss of biodiversity, and displacement of communities. This has led to a lot of unrest and issues. So there's nowhere where the impact of climate is being felt, more adversely than Africa. And the key issues that we are seeing coming up every time we look at and evaluate is the need for support in terms of financing, and also the type of financing and the quantum of financing that is available to African countries, considering everything the countries are facing right now, huge indebtedness, lack of adequate financial instruments to be able to facilitate the transfer of some of these pledge funds to Africa, and which is not allowing us to be able to scale up and meet our needs. But it creates an opportunity. Anytime you have challenges, it is an opportunity for us to knock our heads together and come up with solutions. And some of the solutions that need to be created or developed, majority of my fellow panelists have talked about it. They talked about the need for partnerships. They've talked about the need for bankable projects. They talked about the need for capacity building, etc. But I think another thing we need to understand is that the role of DFIs, especially African DFIs, is very significant, because DFIs are the largest sources of adaptation finance for the continent right now. As of today, DFIs deploy about 53% of the adaptation financing that is being utilized on the continent. African governments, 23%. bilateral agents 16%. The private sector represents a very small fraction of adaptation finance as about 3%. So what we need to do is we need to be able to pull in more private sector funding, and we need to utilize MDBs to be able to do this. One of the critical topics of discussions during COP, Olumide, if you remember, was the special drawing rights and how there is a need for this to be channeled through African DFIs to ensure that you provide liquidity to countries to be able to capitalize projects, to be able to leverage also private sector investment. Because when you do channel this XDR through African DFIs, they are able to leverage the SDR resources almost 3 to 4 times, and Afreximbank strongly advocates for this. But apart from this, what have we been doing ourselves within this space? As Afreximbank, we've created a robust products profile to be able to address the issues around food insecurity and energy security. Some of the programs or products we've deployed include our guarantee products. Olumide, you were discussing earlier to deepen Africa capital markets and how we need to be able to get funds mobilized within these markets. Yes, you are right. If you look at African capital markets as of today, cumulative issuance of about $4 billion, 2 countries accounting for 85% of this funding between South Africa and Egypt. There's need to do more. There's need to be able to promote the issuance of more green bonds, and you can leverage African DFIs again to do this. Afreximbank, on our part, we worked in collaboration with the United Nations Economic Commission for Africa, UNECA. We worked to develop what we call the Liquidity Sustainability Facility, which is a repurchase agreement facility that improves liquidity and attractiveness of African sovereign bonds. For example, what we did here is to support the Liquidity Sustainability Facility with a revolving loan to enable it achieve its objective of stimulating increased demand for climate-aligned Euro bonds that will be issued by African sovereigns. But apart from this, we have a very big role in terms of making sure projects that are required to support energy security and food security are bankable. We created a project preparation unit that has been supporting the development of bankable projects, and they have a pipeline of about $2 billion worth of bankable projects. One of the significant projects that this project preparation funding has gone into supporting is the US $1 million DRC Zambia battery electric vehicle special economic zones projects, where we are seeking to support the development of electric vehicle batteries on the continent. You know that between DRC and Zambia, these 2 countries, they account for majority of the resources or the critical minerals used in the production of electric vehicles and electric vehicle batteries. And what we are trying to do is to create local industries that can fit into the global value chain in terms of supplying these critical minerals, producing electric vehicle batteries, and trapping more out of the value chain. You also reduce shipping, because a lot of a major contributor to greenhouse gas is shipping sector, and shipping sector is where you take all these mineral resources from Africa and you're taking it to Asia. So this project is kind of helping us build local industries within the continent and reduce the need for shipping of African raw materials for processing in Asia. We also developed a fund for export development in Africa, which is an impact equity fund, which supports and invests in sustainable energy projects and also supports food security. So these are some of the things we've done. And some of our interventions within the food security sector has been two-pronged. We've deployed short-term interventions like trade financing facilities, like our ATEX, which is a centralized platform where buyers and sellers of food commodities and agro-commodities meet to trade. But we know that these short-term measures will not solve the solution, will not solve the food insecurity issue in the long run. We've also deployed a lot of instruments that are long-term in nature, like our project financing to support the development of agro-based industrial parks, which we've done in Togo, Benin, and Gabon. And we've deployed over 2 billion up to date in support of these agro-based industrial parks. And we'll continue to develop new projects in Malawi, in Zimbabwe, in Botswana, in Kenya and DRC respectively. So these are some of the things we've done, and we continue to work together with our partners to ensure, we don't leave any country behind in trying to resolve these issues of climate, particularly focusing on the energy security and food security aspects. Thank you.
Thank you. Because I was having a conversation with Marina only yesterday that if you put a torchlight, no matter how bright it is, if you cover it, then obviously the room remains dark. I guess a lot of the stuff that is being done, sadly, a lot of people are not aware, because we don't make a lot of the data is not collated or publicly provided to all. One thing that is certain to me, obviously, is that money is not the issue. We have there seems to be plenty of money. There seem to be pledges being made, but yet again, we go to COP, and by God, I hope we don't. At least if I look at the last three COPs or 4 COPs, I hope the narrative will be different now that obviously we begin to energize ourselves on the continent when we go to COP29. I mean, at CFIA, for instance, Climate Finance and Investment Accelerator Limited, we're already partnering with the FDB to develop develop a green investment program for Africa, where we develop products. And assist projects with capacity building and try and create access to finance by blending structures. Now, you've mentioned a number of things there. Now, one of the things that strikes me is that there's a lot of money on the table, but they seem to be coming in foreign currency, which obviously creates issues with regards to, as you mentioned earlier on, the government obviously are trying to, there's a lot of indebtedness. So we need more private sector in this conversation. And I guess if you take Egypt out of the equation with the $800 million issuance a couple of years ago, literally that 4 billion then begins to become even more scanty in terms of how the capital markets. I guess my question is, just pushing that button further. Projects cannot seem to be accessing funding. Rachel mentioned earlier in terms of bankability. How do we prepare projects better to access this fund? And I don't know if you have preparatory grants available, but how do we prepare these projects better so that they can access these funds? And more importantly, how can we utilize the local capital markets to raise local funds? And maybe DFIs invest in them. Would you have an opinion on that?
Thank you very much, Olumide. So on your question on how do we prepare projects better, I think it's a challenge we've all seen, and it's a challenge that ensures that you don't have a lot of DFIs or financial institutions deploying financing as they should. And we realized this, and we created the Afreximbank Project Preparation Facility, which is an instrument for us to be able to support public, private sector stakeholders in preparing bankable projects. And this Joint Project Preparation Facility pays particular emphasis on, climate and sustainable projects. And one of the things that has been done is that we realize that Exim Bank alone cannot go in on our own and resolve these issues. We have at least up to date about 16.5 billion worth of projects that are in our pipelines. But what we've also done is to establish partnerships with most of our financial intermediaries, regional DFIs, and we created what we call a Joint Project Preparation Facility. And this facility seeks to bring together both Afreximbank and partner DFIs or regional or local DFIs or financial institutions in various member countries across our 52 member countries to crowd in financing to be able to support the development of bankable business plans, feasibility studies. Even some of these funds go as much as procuring legal and financial advisors to be able to sit with project owners and sponsors to be able to develop these studies and to be able to set them on the right path to having a bankable project. And one of the key advantages of the project preparation facility is that it ensures there's a ready takeout by debt financiers, which comprise the bank and the other partners that support us in providing this project preparation facility. To date, we've partnered about 11 institutions. We've partnered the Export Development Fund of Malawi. We've partnered the Nigerian Export-Import Bank. We've partnered the National Bank of Egypt, the Development Bank of Seychelles, and ALDA NEPAD. And we've seen that with this partnership, we're able to scale up the number of projects that need to be prepared. A case in point, the example of Malawi, the projects we developed in Malawi was agro processing clusters, working with the Export Development Fund of Malawi. And with our intervention, these projects were able to see the light of day. So I believe that is in partnerships across joint project preparation platforms that African DFIs and financial institutions can assist project sponsors, project developers to take their ideas from concepts to reality, to bankable projects that financial institutions can look at and on-lend to. So that's in one instance. On your second question, in terms of supporting the development of the domestic capital markets and whether DFIs would be interested in investing in local currency bonds or stimulating the local currency bond markets. I think this is something that's is already happening. DFIs are already playing in that space. I know that IFC, AFDB, and even Afreximbank have partnered with local capital market players to develop or to invest in local currency bonds. And one of the things we are doing right now is a local currency program where we are also lending in local currency. We launched it with South Africa, and now we are deploying in Nigeria because what the situation is right now with regards to foreign exchange across our member countries. So deepening the local currency bond market is even in our best interest because it also delivers for us the local currencies that we may utilize in trying to support the development of some of these projects where you can on-lend to in US dollars or euro or any other foreign currency because of the huge impact of foreign currency devaluations that these countries are currently facing. So it's something we are already actively doing, and we are deploying both advisory support to some of our partners in country, and we are also in some instances deploying our guarantee solutions to sort of wrap around some of these issuances where necessary. Thank you.
Thank you. Provided us with a lot of information that perhaps we were not even aware of. I certainly wasn't aware of a lot of the stuff that you're doing. And I know I have a question pending with Rachel, but in light of what both of you have actually spoken about, right? I want to go back to David, because one of the things that we spoke about at the Climate Week was a lot of stuff that was going on in silos, and the need for collaborative efforts and actually bringing all of this together in terms of data, in terms of available comparable climate risk data, more importantly, risk frameworks, because we've spoken today about de-risking. I guess, bringing it back, because obviously I know you somewhat running the Secretariat as well, and you're obviously clearly part of those developing the strategy going forward, 2024, 2027 for AFAC. I guess my question to you, and I had a number of questions that I shared with earlier, but I guess if you had an opportunity to speak today with Afreximbank and EcoBank and similar other entities, what are the main messages you want to send out in terms of the need for collaboration that would enable leveraging the AFAC platform actually help scale up financial initiatives and also the impact on proper projects on the continent, ultimately alleviating poverty, increasing access to energy, increasing access to food, and broadening up our food security in view of the need for the use of more climatic finance.
Right, and I think you said it earlier, listening to both Rachel and Dottie. Clearly, there's a lot being done by African institutions on this issue. And the innovation, the intention, the purpose is all very much reflected in their work. And this really kind of mirrors what we had coming out of Nairobi last year at the Africa Summit. The leaders made a very powerful statement going into COP28 that the continent was on the table, the continent had resources. And clearly from what we hear, from what pipeline they have, the facilities to grow that pipeline. They may be small, but they're very catalytic. And at this point in time, that's what we need on the continent. I've just come through the Q&As, and it's the usual question, where are these resources? I mean, for a developer sitting on a resource, a micro, let's say, a hydro dam somewhere in their village, they're looking at this resource, they own this resource, but that's all. And they don't even know where Africa Exim Bank is or the next EcoBank. And the idea is that at some point in time, we need to meet the people where they are. And so it's very important as AFAC, through the entities that we wish to reach, which is the second layer being where the two sisters sit, both in those intermediaries, EcoBank, and then of course Afri-Exim Bank for the resources that they have. In terms of capacity, we need to, as AFAC, the AFAC Secretariat, communicate more on what it means to have the collective, because that's where G-Funds will meet us, because G-Funds is not going to meet individually all the financial sector on the continent. What we need to do is to understand the opportunity in the country. I think we come to this discussion based off the Paris Agreement. It's very important that we go back to what the Paris Agreement says. It talks about dealing with climate challenges in the context of sustainable development and poverty eradications. It's not doing climate and doing development. And so as the African continent that is at the center of those two challenges, climate and development, it's very important that we use the resources that we have to show how climate and development intersect. The same article talks about common but differentiated responsibilities in the context of national circumstances. So it's very, very important that what we are hearing today feeds into what countries define as climate. I think it was Rachel who talked about greenwashing. So it's very important. To date, countries are designing their next phase of nationally determined contributions. That is a roadmap of how these national circumstances sees themselves on the climate trajectory. That is a commitment that the country has made. So however good our portfolios are, unless they reflect what is in Gabon or Burkina Faso's NDC, it will be greenwashing, because the definition matters, the metrics matter. And so it's very, very important that as we speak here, we are also speaking to the policymakers that are committing their countries to certain obligations. And so it's good that we have this, but it's also good that we're looking at the policy direction. And so as AFAC, we would want, our role would be as a secretary, it is a platform for where the financial sector meets itself. So whether it's insurance sector, the central bank as regulators, and the ministries of finance that have any decision making for this sector, that there is a common definition of how Africa wants to move in the direction towards net zero by 2050. And so through the pillars that AFAC has on awareness, on climate risk metrics, on management of those risks, where data comes in, to opportunities in terms of climate finance mobilization, we plot what we've had here in terms of pipelines, in terms of capacity, because I believe, and we've had this, that there's a lot of capacity going on, but we need to find a common place that you go and meet, Dolce, you go and meet Rachel, and different states to meet them. There are different platforms, naturally, that financial institutions are, but this is the unique African one. So we will not get a collective African voice if we don't have a common presence or platform where we articulate where we stand in our own common differentiated responsibilities on the climate question. Thank you.
Thank you very much. It's interesting.
Is it me?
We have a number of questions actually.
Yes, we lost your phone,
but I still had my question with Rachel on climate indicators, but I will come to that in a second. But let me, I mean, for years, actually, we at CFIA, we talked about developing portal, which will have literally projects, would have information about some of the things that Duranty spoke about, the capacity building, concession financing, and have a lot of financial advisors that can provide assistance to projects. And I think for me, it was one of the things that actually interested me in what AFAC was all about. Now, I know you had stated, I mean, if the one thing that AFDB always says that even though they're championing, if I can use that word, or leading the charge on AFAC, they don't want to be perceived as owning it. It's actually a collaborative entity with the market. And as such, they will want more of the market to partner with them on this journey. So it's not an AFDB entity, it's a market entity, and every one of us needs to be a partner. And that's why you've got the working groups and all that. So, you know, and I'm sure you probably answered the question, but I have a question here from Mr. Tude Arugumati, which says that, how does AFAC and other AFDB climate enterprise programs align with the relevant investor stakeholders, policy platforms, such as WTO, the African Free Trade Alliance, etc., to strategic objectives within the financial value chain, ecosystem, and network that works in tandem? It's a very long question there, but I think we get the message. It's about how do we collaborate, how do we extend this collaboration, and ensure that, you know, other global entities are at the table with us.
Right. How do we do this? I think we articulated that very simply in our AFAC 2023-2027 strategy. And ideally, there is no subscription to join that platform. It is a platform for entities that are in this sector to bring what they have, to bring in terms of what they want to share. Most of it might be in the public space. And ideally, the interest is that as a collective, this sector becomes a resource. It becomes a de-risker by itself, listening to what the two presenters had to give. Those pipelines are themselves a de-risking element for whoever investor that is looking, because therein is a lot of information, is already a lot of feasibility studies that have been conducted in the risk assessments. So those are resources ready to be funded. And so if we can create that pipeline in an institution that is a multilateral development bank, the only one resident on this continent, it's very important that we then are able to leverage, whether it is ECA with its technical and database, or the other institutions that have a lot of advisory work, channeled into one segment. the bank has been very good at creating platforms, one of them being the Africa Investment Forum, as a marketplace, as a place where you have, they call them deal marketplaces. So Green Pipeline, let's have stakeholders really unwrap the opportunity. And so that is what the design mechanism of AFAC is. We believe and we know that there are lots of opportunities. We've been doing development for the last 60 years at the bank. So we know the opportunity, we know the challenges, but we need to create spaces that are away from traditional flows of capital, that you need a certain level of risk, you need to clear some parameters. The world has left that station. We need to reinvent where the opportunity is. The opportunity isn't really on the profiles of risk. We need to rethink, do a disruption on what opportunities are. Today you're hearing critical minerals. Africa has abundance of those, green hydrogen, all these things. How do you finance them in a way that the common man, because there's a whole element of inclusion that has to be factored in. They own these resources. How are they brought onto the table? They don't read profiles. How do we then ensure that they are part of this resource in conversation? And I think if we all brought, because we have high street operations, which are the banking sector, they deal day to day. There's a lot of data and information that they collect on the customer. That is very important for the upper stream, let's say the African Development Bank, to incorporate that as they mobilize capital. So there's a whole range of conversations that we need to have among ourselves at different levels. Thanks.
Thank you very much. I must admit, it is not often that I'm privileged enough to have access to you know, a female-only panel. I need to emphasize that. So this for me obviously is an interesting time. Now I have a question here, and I'm trying to get to it if I can, and that could apply to be answered by any one of you. If I can get to the question, it speaks about you talked about inclusion. You talked about inclusion, and you talked about you talked about the commercial banks on the high street. And I have a question here, and I'm trying to get to the question. And the question says something about, it talked about how can female I have about 200 odd participants on this webinar here, assuming 50% of them will be. And the question is, how can women access this climate finance in terms of being able to finance projects? So I don't know, Rachel or Rati, who might want to actually attempt this question, please.
Okay, thank you very much. I think I will try. So I hope my volume is all right.
Yes, it is. Let me hear you.
And your question is, sorry, the line kept cutting.
I think the question was, what are the opportunities to facilitate access to climate finance to women in Africa? That's the exact question.
Great, thank you. So, as you know, women are quite important for us, especially in this generation and also in terms of generally climate change. So there are a number of financial instruments, or there are a number of programs that a number of banks are coming up with. EcoBank, for example, was one of the first banks that came up with our Elevate program. So as I mentioned previously, we have a financial program for women mainly. So these are for women-owned businesses, companies where they're majority women-owned, and generally just women sole proprietors as well. So this is where we offer sort of direct financing to women, and these financing instruments range from a number of things. So when you have a company, it could be for CapEx, it could be for some strong infrastructure funding, it could be for anything that the company wants, and we do a wide range across the instruments that we offer. We also offer very, like I said, very flexible rates depending on whether you meet certain environmental impacts or not. So for us as a bank in EcoBank, the Elevate program is a key program that we offer to women from both the consumer, commercial, and the corporate and investment banking clientele, which is from the ordinary mom and pop to the more sophisticated customer who may own a business. And basically, so in time as well, we hope to develop more products, but for us, this is one of our most successful flagship financial programs for women that has won many, many awards. Over and above that as well, we do provide a lot of technical assistance. As I mentioned before, we don't just give women financing, we train women, we expose them to a lot of experienced people as well who can help them to properly understand their balance sheet, the credits, because it's not always, we talk about access to finance for women. How do women get it? Simply because you're a woman doesn't mean that you would get a loan. Simply because you have a project doesn't mean that it will get financed. The economics must make sense. You must have your balance, you must have your balance sheet, you must have, your right books, your records kept, you must have good credit profile. So we help customers with all of it in keeping the right credit profiles and building and developing their books, in understanding their assets. And also, we also have an extra thing that we do where I forgot, we have a guarantee program, which is one of the impediments that also hinders women from being able to access money. We partnered with the African Guarantee Fund and a few others as well, like Rabobank, and they provide guarantees on the back of the financing that we give women, making it also easier for women to take the loans as well. So we have this program that gives women financing, backs it up with a guarantee that supports it, and on top of it, also adds training and support for the women to be able to access climate finance and even general finance as well. So thank you. I hope I've answered it.
Thank you very much. I have one more question, which actually speaks to...
Olumide, just before you move away for that question, because you did ask Rachel or myself to see if we could answer.
Sorry, did you say you wanted to say something?
Yes, I wanted to say something on that because,
Please.
Just to speak to the fact that this is a woman-led panel, and for us at Afrexim Bank, we've been supporting women-led businesses. We actually had to create a program within our SME unit to focus on supporting women-led entrepreneurs and their enterprises. And most of the support we've given has been twofold. We've given financial support, but we've done this through our financial intermediaries. As you know, Afrexim Bank is a development finance institution, so we are not able to directly lend to most of these women-led businesses, but what we've done is to identify certain partner financial institutions who act as our financial intermediaries and focus on lending to women-led business. And last year, 2023, we worked with 3 institutions, 1 in South Africa and 2 West African financial institutions, to deploy about $100 million funding to support women-led businesses. And we did not only focus on financing, just as Rachel said, majority of the issues that face women business transcends financing. We also decided to provide capacity building support. We worked with Impact R, which is a major capacity building provider to provide capacity building, accelerator and incubator programs across all our member countries. And finally, we ended the year last year, as you know, Olumide, with our Intra-African Trade Fair, which we held in Cairo, Egypt, which is a forum that brings together African businesses, enterprises to be able to trade amongst themselves. We were able to showcase about 50 women-led businesses from our Impact App program, working together with the Africa Union to showcase these business enterprises in Cairo. So these people were able to come to Cairo, showcase their products, their service offerings, and scale up their business to the next level. So these are some of the interventions that we do and will continue to do to support women and women-led businesses on the continent. Thank you.
Thank you very much. Please, I cannot be accused of not being gender positive. I have a panel of esteemed women on my to discuss all of this today. One question, and I'll end with this. One question that's actually come up. We've spoken about a lot of the things that the banks can do. We've spoken about some of the things that the DFIs can do. Obviously, clearly, you don't lend directly. But also, we clearly work within the regulatory framework. And I have a question here from Ibrahim Jima, who I believe works for Marble in Nigeria. How can policy reforms and regulatory framework be optimized to encourage greater investment in sustainable infrastructure and green technology across the African continent? And I will open that to all three of you as we bring this to a close. Perhaps I could start with Rachel.
Thank you, Olamide. Again, the internet line is bad, so please repeat the question again. I don't know what's happening there with the waves today.
I think the question was, how can policy reforms and regulatory frameworks be optimized to encourage greater investment in sustainable infrastructure and green technologies across the African continent?
Thank you. So thank you very much. This is indeed, I think it's a challenging question in itself, but we've tried, I think.
I know it's a big question. It's a big question, and I'm not expecting a perfect answer. I'm looking for an opinion.
No, that's fine. I think with every policy that we developed, it has to be influenced by really good evidence, some sort of research. And this is one of the things that I picked up from my, if I can call it, my schooling at the University of Oxford, where it was always emphasized that using research as a fundamental to build policy was important to helping to make sure that you get the right policies that are targeted at the right level. And so I believe that for us to be able to have any good policy reform, firstly, especially for us in the African sector, we need to do some really good groundwork. So whether it is evidence-based policy, which is attached with some practical evidence from the market in partnership with maybe the private sector or other sectors who bring in added experience to the evidentiary, evidentiary evidence will help to better inform policy. Because without that, sometimes you would see that we would have some policies that don't necessarily work. The policymaker would think that, oh, this is how it's supposed to be. But when, for example, the private sector or financial institutions, when we look at the policies, we're like, but this doesn't necessarily work for us. So, for example, the Basel III is coming up with the climate regulations for the African markets, where we're all supposed to be sort of doing some climate risk assessments, and it's being done by BIS. One of the very good things that they've done is market consultation, where they've engaged the market, letting all banks, all stakeholders come in and present on where we think some of the challenges are, what we think that they should take into consideration. So we don't just, they're not just going in to create a policy or to create something for all of us to follow, but they create some sort of a consultative process, back it up by some kind of evidence-informed decision-making from a research perspective, and sort of helping that or channeling that into a policy to ensure that it becomes successful once it is rolled out. So that is how I think that, in creating a better policy reform, a better policy environment that serves the needs that is intended to, these are some of the things that needs to be taken into consideration. Thank you.
Thank you very much. Perhaps, I don't know if Roti has an opinion on this.
Yeah, let me quickly maybe add on that, especially that it relates to green infrastructure, financing green infrastructure on the continent. You may have heard that at COP28 and even prior to that at COP27, that the continent, this being African Union, Africa 50, the bank, launched what was called the Alliance for Green Infrastructure in Africa. It's a 10 billion program that aims to start a blended fund of about 500 million. Now at COP28, they were able to get pledges of about $175 million from their pledging table. What that means is that when you have all these entities coming to align behind a green infrastructure program for the continent, these regulatory issues are being addressed, because again, this was also a discussion at the Africa Summit. It was out in the resolutions of the African Summit, that regulatory and policy reforms would be addressed by the continent, and this is one way of addressing them. As you know, Africa 50 is an infrastructure program on structuring infrastructure-based deals on the continent. So they are already vehicles that the continent is running behind. The infrastructure, the one that I've listed, being one of them, we have the adaptation one, the Africa Adaptation Acceleration Program, the 25 billion program that the bank also hosts. These are some of those programs that look at de-risking or even mobilizing finance holistically on how to ensure that policies are aligned to moving capital. Thank you.
Thank you very much, Davina. Maybe I'll give the last word on this question to Onorati.
Thank you, Olumide. And I think it's a very, very interesting question, because it's saying that, look, how can we scale up the right policies and reforms that need to come in place to ensure that we have sustained flow of climate funding for the continent? For me, I think we have to look at this from a two-pronged approach. The people in charge of policy development and deployment are usually public sector. The people who kind of feel the brunt of the policies that are developed or instituted are usually private sector stakeholders and the general public at large. But I think what we need to do more of as DFIs is our advocacy role. We need to provide support to our member countries, technical support and assistance to these governments in being able to identify what is the right policy framework or policies or regulations that need to be instituted to be able to create an enabling environment to attract and trap private sector investment or multilateral investment or foreign direct investment to the climate sector. I'll give you an example of one of our member countries, the government of Egypt. When Egypt hosted the COP in COP27, one of the key things they did was to take a hard look at their regulations, their policies, and to put in a lot of reforms in there to be able to attract multilateral funding and foreign direct investments into the climate space in Egypt. They put together the NOEFI program, which you know very well. And with that, they were able to attract significant funding of over 800 million into that space. This is a case study that other African countries can also look at and deploy. South Africa did the same. So I think we as DFIs also must, try and advocate where there are good practices in certain countries for it to be adopted and deployed in other countries. We must support these countries also in scaling up and being able to understand and capacitate themselves in putting out the right policies. So it's our duty and our responsibilities, not just to focus on the financing, but to also look at our advocacy role in terms of technical support and assistance to governments in member countries to deploy and put in place appropriate policies and regulations. Thank you.
Thank you very much, ladies. If you can all put on your cameras, please. I think, look, we can talk all day. There are many, many questions also that are still outstanding, which I cannot ask at this point. We're running out of time, but I can only say thank you very much for your time. Olumide Doherty, Mrs. Davina Owela, Mrs. and Rachel Antwi, Mrs. Thank you very much for being part of this and for making this such an enjoyable panel discussion. I would like to hand over back to our host, Mrs. Marina Finnick, to provide us with the last word. If I can also ask the chair, Mr. Ade Yaya, to also put on his camera, that would be great, sir. Thank you very much, and over. Have a good evening.
Thank you very much, Olumide, for this very insightful and interesting panel. So for the closing remarks, I just want to take a very few minutes to express again our gratitude on behalf of the Making Finance Work for Africa Partnership to all the stakeholders who made this webinar a success. First, I want to thank our esteemed speakers again, Mr. Lala, Mrs. Antwi, Mrs. Doherty, and Mrs. Iwela, for sharing their valuable insights and also for showcasing the different initiatives your respective institutions are implementing. Olumide, you are absolutely right. We do need to share more, to highlight more those actions so that we can learn from each other and to see the progress that we are making. From the first sustainability link loan issued by EcoBank to the project facilitation facility within AFRICIM or even the Africa Financial Alliance for Climate Change. So thank you very much for showcasing this important initiative. Secondly, I want to thank the partners to this webinar, the Africa Financial Alliance on Climate Change and the CFIA for the trust and for your support in hosting the webinar. I also want to take the opportunity to thank, more generally speaking, the Making Finance Work for Africa members, EFGB, AFD, AFRICIM Bank, EIB and TPX for the continued support, which allow us to achieve our mandate through events such as this one. This is really what Making Finance Work for Africa is about. We want to bring together various stakeholders to share knowledge, to advocate, and to cooperate to develop the Africa financial sector and make it work for African descendants. Last but certainly not least, I want to thank all of you participants today for your presence and your engagement through the discussions. I was looking at the participation list and I recognize several names. And I'm happy to see that some participants are now regulars to our webinars. We really appreciate and value your loyalty and your constant engagement. And this is a very strong signal because it's showing that we are moving toward the right direction. Your presence today shows that you care, that you are aware, and that you want to act on climate change in Africa. Through these virtual sessions, we are learning from each other. And together, we are exploring actionable solutions in shaping resilient financial systems that can withstand the impacts of climate change while fostering sustainable growth across the African continent. So as we move forward, let us commit to translating these insights into actionable initiatives and in a collaborative way. Because one of the main takeaways for me from this webinar is the need to collaborate, to work together. It's only by working together, by engaging the entire ecosystem, that we can tackle the different challenges mentioned to this webinar. And it's only by working together that we can make sure that we, Africa, will be the navigator and not just the passenger in the climate change journey, to quote Mr. Yelemi, my chairman. So once again, thank you very much and for your participation. Thank you to the speaker, to the engaged audience, and to our partner for making this webinar a successful one. And I wish you a very nice day or rest of the afternoon. And I look forward to seeing you again to the next webinar. Thank you.
Thank you, Marina.
Thank you, Marina. And thank you, ladies, once again.
Thanks, everybody.
Thank
Thanks,
you.
Olumide.
Thank you. Bye.
Bye.
Thank you.